Hey guys, my name is Mary and I have been involved in trading for quite a while to share my knowledge with someone else. That's why I created my YouTube channel. If you want to participate in trading sessions with me and receive signals from me, then please subscribe to my Telegram channel. The link is in the description. Today I will conduct several successful trades. If you like it, join my YouTube and Telegram channels where I provide accurate entry signals. Let's begin our trading session with a scenario involving the British pound and the Japanese yen pair. It's quite intriguing. Now, let's switch to our trading platform immediately and enter a trade on the upside as we have formed two double bottoms. I'm considering a 3-minute trade for $300, expecting the price to rise. Switching to a 15-second time frame, we can clearly see a double bottom pattern which should work with a 100% probability. Meanwhile, you can also keep an eye on other currency pairs. Now, let's focus on the Australian dollar with the Canadian dollar pair. On the chart, we have a slightly profitable situation called a hammer. As I've mentioned before, a hammer is a reversal pattern. Let me explain it again while entering this trade. A hammer indicates a lack of either buyers or sellers in the market. In this case, there is a shortage of sellers and buyers are pushing the price up. A hammer appears as a candle with a small body and a long shadow. From this pattern, we can deduce that sellers attempted to push the price down, but they were unsuccessful. Afterward, a hammer was formed. Now, with the sellers exhausted, the price will likely surge upward as buyers take full control. Based on this movement, the chart should reach at least the 50% Fibonacci level, counting from this impulse. In fact, I believe the price will even surpass this impulse entirely. But let's move on and examine other charts. Now, let's take a look at the US dollar with the Canadian dollar pair. We have an interesting situation here with an engulfing pattern, which is essentially a stretched out version of a hammer. I'll open a trade on the USD currency pair for a downward movement, investing $300 for 3 minutes. There. I already executed 3 trades. The engulfing pattern is apparent here. The red candle completely engulfs the green candle, indicating that the body of the green candle is smaller than the body of the following red candle. This is a reversal pattern, signaling that sellers have overwhelmed buyers, fully draining their liquidity, and the price will continue to move downward. In an uptrend, this pattern would serve as a signal for an upward trade. I'm really short in this trade as all the entries align with the technical analysis and the trades are already showing profits. Let's observe how they will close. In the meantime, let's check out the British pound and the US dollar currency pair, which doesn't seem particularly interesting. The Australian dollar with the Canadian dollar pair also doesn't present any intriguing opportunities. Now, Czech franc and Japanese yen is what I'd call a bad situation. While there appears to be a double bottom pattern, it is so vague that one would have to imagine it out of thin air. Meanwhile, the first trade has already closed profitably, yielding $185, and the second trade is also about to close with the same amount in profit. Clearly, technical analysis is working perfectly. Now, the hammer pattern in particular worked exceptionally well. Generally, a hammer pattern always indicates a reversal in the market. If the market goes up after a hammer formation, it's a rare occurrence happening only in about 1 out of 100 cases. The hammer is an incredibly robust pattern based on clear logic. There is fanciful and illogical technical analysis, and then there is technical analysis that follows logical principles. Now let's turn to Czech franc and Japanese yen. If we use our imagination and try to find something, we might notice a double bottom pattern. Though I'm not keen on entering this pair, I will observe how it unfolds. So far, 2 trades have already closed with profits, but it seems that USD and Canadian dollar will result in a loss. Well, let's keep an eye on Czech franc and Japanese yen, where detecting the double bottom requires some imagination. However, I won't enter this trade due to the high risks, and the market itself is starting to turn downward. Something is strongly pushing USD and Canadian dollar upwards. Nevertheless, I already have 2 profitable trades. Even if this particular trade ends in a loss, I can easily offset it and still make a profit. In trading, as with any other profession, it's important to understand that there is no wins without losses. No matter how experienced you are, You can't just execute, let's say, 200 profitable trades without any losses at pocket option. That's just not realistic. All traders experience occasional losses. It's essential to accept them normally and not to lose motivation. Yes, one trade closes with a loss. Well, let's see what the next currency pair offers. Australian dollar and Canadian dollar. Here I will open an upward trade with an investment of $600, twice the usual size. Let's take another look at the chart. Although generally one could also enter for a downward trade on the breakout. Identifying support zones. Alright, let's continue. British pound with Japanese yen. Here too a downward trade seems viable. There's also another small level here, almost like a mini level. Well, I think I know what needs to be done. I'm opening the trading platform and placing an upward trade with $600 for 3 minutes. Or perhaps not. The market is acting unusual right now, making it very challenging to find suitable opportunities. There is nothing particularly interesting with the other currency pairs except for Australian dollar and Canadian dollar. By the way, Australian and Canadian dollars has already begun breaking the level for a downward trade. Most likely I will enter a trade on this pair as well. Let me open a downward trade on the British pound with the Japanese yen, as the breakout has already occurred, and the Australian dollar with the Canadian dollar. I'll also enter a downward trade. If these two trades close profitably, I can easily offset the loss-making trade as if it never happened. I anticipate a robust downward movement because the price is breaking significant support levels after strong impulses. The current situation should definitely result in a very potent, favorable, and impulsive downward movement. Looking at the British pound with the Japanese yen, the situation is similar here. First, there was a flat period, with the price entering the flat phase from a downward trend. In other words, the chart initially experienced a continuous downward movement, followed by the formation of a flat phase, and now we have observed a breakout to the downside, so the trade should close with a profit. Now we can wait for both trades to conclude. In my opinion, this trade will likely end up in a loss, so I intend to open another one with $1,200, but without coverage. Let's consider it a reinforcement and hedging trade. I'm entering another trade with double the amount for hedging purposes, just as a precaution because the current market situation seems robust and should work out with a high probability. The only potential issue could be if I misjudged the timing, which can happen on occasion. In the meantime, Australian dollar and Canadian dollar performed exceptionally well, following the exact movements I anticipated. We have 40 seconds left until this trade expires. It's practically impossible for this trade to close with a loss due to any unexpected events. There is a significant downward movement, which will result in a net profit of $528, which is quite satisfying. However, the British pound with the Japanese yen decided to spike upwards. Unpleasant, but not critical, something I can handle. We have a few seconds left until the Australian dollar with the Canadian dollar trade concludes. The anticipated impulse worked perfectly. There you go, the trade closes with a profit, and I made over $500 net. The previous trade, of course, ended in a loss. Nevertheless, I opened another trade for $1,200, which will completely offset all the losses today and generate profits. This is a typical strategy employed by experienced traders. If you have knowledge and confidence, it's highly unlikely to encounter 2-3 consecutive losing trades. So losses can be easily recovered by increasing the position size. 3 consecutive losing trades may happen to beginners and perhaps to professionals only in cases where very significant news disrupt the entire technical analysis. But such instances are very rare. For now, let's be patient and wait. There were only 7 seconds left. Admittedly, during those last few seconds, the trade made me anxious, but in the end it closed with a profit, approximately $720 net. Today's overall profit amounted with over $800, although there is a possibility that I might have overlooked something. It was a pretty nerve-wracking day, to be honest, but ultimately very lucrative. I sincerely appreciate your time and interest in watching this video. If you enjoyed it, I would greatly appreciate your support by giving it a thumbs up. I also encourage you to subscribe to my YouTube channel and join my Telegram channel to stay informed about my future content. By becoming a part of our community, we can build a friendship and engage in more discussions. Thank you for your support. Goodbye.